So I'm starting right away. Let me record this session. Let me make sure that it's recorded. All right. All right. Good evening, everyone. Thank you for joining in. Like I said on the group, after this class, after this session, some people will actually have the confidence to be able to trade. Like when you go into the market, you'll be able to know what you're looking out for and what you're not looking out for. Basically, that's why I'm trying to help everybody. So for those that cannot like pay for mentorship, basically this is mostly what I teach people on my mentorship program. This is mostly one of the things that I teach people on my mentorship program. Please, can you guys hear me one more time before I actually start?
We can hear you. We can hear you.
All right. So, like I said, this is something that I actually teach people on my mentorship program. But yeah, there's no need for those that don't have the money to pay for mentorship or something like that. This is also an opportunity for you to be able to know how to analyze the market, synthetic indices, not only synthetic indices, because this strategy works on the currency pace and then synthetic indices, as far as you know what you're doing, basically. So let's get right into it. All right, so we are going to be using 75, this V75, because I think I've had like I've posted like some threads on it even before price got to this level. I think you guys can keep track of that on the group, on the general group, because I always post my buyers basically on the general group. So I'm going to show you guys basically how I get my buyers and how I'm able to go down to the lower time frame to look for entries for a particular. All right, so let me leave trading view. Let me use um, derive. All right, so which one should I start with? All right, so first of all, if you guys know what we call first of all, the strategy that I trade is basically SBI. It's called is SBI. Let me increase this a little bit. It's basic SBI, yeah. So it's sweep, break, and the last one, inducements, which I might be calling it liquidity. So yeah, the person actually taught me this does not even trade, like he trades synthetic indices, but he mostly trades currency pairs. So I had to do my own homework basically. I had to refine some things, I had to unlearn some things, and then basically I just had to make that strategy work for synthetic indices, because there's a lot of things that he said that he actually works, but it doesn't work for synthetic indices because he does not trade synthetic indices, right? So SBI, that's a strategy, which is sweep, break, and inducements, which I'm going to show you guys. So let me draw it out. All right, so it looks like this. This is for a buy scenario. Basically, if you want to buy the market, this is the structure that you'll be looking out for. Now, this is the sweep. Let me name them out. This low here, this we call here, that is the sweep. I'll show you guys all the breaks because there's a lot of There's a lot of breaks. That's where we have our break of structure. That's what I say. Um, BOS. This is a short form of break of structure. BOS, basically BOS, break of structure. So that's the break that we have here. Have, have our inducements, which we can also call it liquidity. Have our inducements, then you should have an order block that did not get retested. Then we have our take profits. All right. So basically, this is all you're looking out for. This is the structure that we are going to be looking out for. So this is for a buy scenario. So let me do for a sell. Okay, this is for a buy scenario. I'm going to start with this first. Then I'm going to go into the chart and then show you how you can use it to trade. Basically. All right. So this is a sweep because we have the market, the price actually sweep this low. It just means that price broke below this low. So price sweep this low. That's why we basically just say this is a sweep. Then we now have a break of structure to the upside. We have a break of structure to the upside, and then we now have inducement. This is liquidity. And then once you see liquidity and then you see an order block, you're always expecting the market to give you a second break of structure. Because this second break of structure, this break, this one might not be this one, this first break might not be really important, right? From from experience, this first break sometimes they're not really important, but you see the second break, this second break actually tells you that, oh, this setup is valid. The second break tells you that, oh yes, this setup is actually valid, because that's how you're going to have your TP. The highest points the market got to before coming back to POI. The highest point the market got to before coming back to POI is going to be your TP, which that's why I have my TP here. Which that's why I have my TP here. And then another thing that I'm going to say is whatsoever you're doing on your higher time frame, you're going to be doing the same thing on your lower time frame, on your entry time frame. Because let's say you're using 20, I use 24 hours as my bias, because yes, this is the right thing to do. Using the higher time frame, that's the daily time frame. Because one of this candle, you can see this, one of this candle is 1 day. One candle that's been formed in the daily time frame is 1 day. This for people that don't really know. So I'm trying to also touch the basics also, right? So please, if you guys cannot hear me, someone at some point, if you guys stop hearing me, someone should just text me so that I don't just go on like that. So for those that don't really understand those that don't really know basic, like you're not really conversant with forex trading, one candle on a daily time frame, on a daily time frame, one candle is a day. So this is a day. This the next candle is another day. This another candle is another day. So I think that is, you guys should understand that. So let's go back to this. So We have a sweep. We have a second break. Like I said, I'm going to repeat it again. This second break might not really be important, but after price has swept this low and then come back to give you liquidity, which is inducement, this second break is very important. Without this second break, this is what might happen to you. This is what is going to happen. So let's say you had this, you have your sweep, you have your break, you have engagement. So let's say the market did this. This is your sweep. Now this is liquidity. Liquidity has been given, and then you're expecting the market to, you've drawn your setup, so you're expecting the market to break above this high, this previous high, expecting price to break above this previous high here, and then the price did not break above it, and then let's say price closed below it this way. The one thing is going to happen to you. Either when price comes to POI, when price comes to POI, when this price comes to POI, one thing is going to happen, it's going to sweep you. It's going to take you out. Let's say you use a buy limit, you use sell limit. Price is going to take you out and then buy. Basically, or most times it's just take you out and then keep selling. So this second break of structure is a must. Without this break, there is no setup. Basically, that's how important this break is. The second break of structure is. Without this break, there is basically no setup for you to trade. So you don't go and pursue the market. Okay, let's say you saw something like this. And then when I also mean break of structure, I'm not talking about, when we have like a week, like candle body, we have candle body, and then on that same candle, you might have a week. I'm not talking about week. It cannot wick out this candle. It must close above this zone, candle body. The break of structure must close above this previous zone, or above this previous high, rather. Candle body, not wick, not using wick. Wick for if you want to have if you want to have break of structure, where you can use wicks is if you have like an order block, and then okay, you have an order. I'm going to show you that on the chart. So as I'm talking, I'm going to go to the chart and show you before I actually show you this whole thing. So let's say this we have this setup, we have this buy, setup. I can see my sweep, I can see my order block. Basically, another block is the last candle before an impulsive move to the opposite direction. Also, an order block is money being stacked somewhere. So price is always going to come back to take that money. If you see an order block and then you see liquidity, just know that price is always going to come back to basically an order block is money being stacked somewhere. So the price cannot just be buying, right? It must always come back to take that money being stacked somewhere to continue its move, basically. So if you now see liquidity above it or below it, and then you now have a break of structure, that setup is valid. That's an A plus. That's an A plus setup. All right. So let me. So I have this. Um. I have my order block. That's this last candle before an impulsive move to the opposite direction. And as you can see, also another block and an order block is also a candle that did not get retested. And other blocks is also a candle that did not get retested. So you can see this black candle. This is my other block. Rather, let me use this. I'm trying to make it really clear so that people that don't really know, people that don't really have knowledge about this will understand. All right. So this candle, this black candle, this is my other block. So I have this sweep. I have this other block. Now I can decide to use this as my liquidity. and I can decide to use this as my liquidity. I can decide to use what's happening. All right, so I can decide to use this as my liquidity. You can see price tried coming back to tap on this other block. Price tried to come back to retest this other block, but it did not. And what did it do? It came out to leave an inducement liquidity basically. And the same thing happening. If you don't want to use this, you can also use this other one. And like I said, this is the only time that you can actually use your wick, because you can see this is where the candle, this is where, let me zoom in a bit. This is where the candle closed. This other straight line is being called wick. This is like a wick. This is the wick. This is the only time you can actually use a wick. Apart from that, if you're looking out for break of structure, your break of structure, let's say you want price to break, let's say you're expecting price to break above this zone, above here. Let's say you're expecting price to break above this place. This is actually a break. This is a valid break of structure, because you can see this candle close. This candle, it closed above this zone. It did not wick. It did not use wick to close above it. Do you understand? I hope you guys understand that. So let me go back to the setup. So you can see we have our sweep. We have our sweep. You can use any of this as a we have our sweep. Then we have a why is this our sweep? Is because there was a break. There was a break to the downside. So now we have liquidity. Like I said, if you don't want to use here, you can also use here. Now, this is where the second break of structure comes in. Now, this is where you can see this is the most recent, this is a recent high before this low. So what do? You're expecting price to break above here. You're expecting price to break above here. And what happened? Price came and broke above it. And once price has done that, then your setup is valid. All you just have to do is wait for price to come into your POI. But when price comes into your POI, you don't just buy. Like I said, your TP is always going to be the highest points the market got to before making its way to POI. So where is the highest point the market got to? This is the highest point the market got to. This is the highest point the market got to before making its way to POI. Now, don't forget, this is daily time frame. These are our buyers. Let's say all these things did not. Let's say, I'm just trying to. This is like a previous setup that I'm just using to explain this strategy for you guys, right? So let's say all of this did not happen, right? So you basically now you know that you have you have your structure. So let's go back and see whether this align with the structure that I drew. So this is our sweep, which are our sweep. This is our other block. This last black candle, basically this blue rectangle that I just drew, that this is the other block. Now I'll say it again. Why is it an other block? Is because price did not come back to retest. Price did not come back to retest it. It did not come out to retest this candle. Now your liquidity, which is inducement, where is it? Like I said, you can actually use this one, or if you don't want to use this one, you can use this one. If you don't want to use this one, you can use this one. You can even also use this one. This can also be your liquidity. So you're expecting price to come out and to come and take out liquidity, tap on your other block, and then move. All right, so this is your liquidity. Now, where's your second break? After liquidity has been formed, where's the second break of structure? This break. This is our break. If you're using here, this is your break. If you're using here as your liquidity, let's say I wanted to use here as your liquidity. This is your break of structure to the upside. This is your break of structure. So we have our TP here. Where is our TP? The highest points the market got before making its way to POI, which this is the highest points the market got to before making its way to POI. Can you guys still hear me? I hope you guys can hear me. Can someone respond? Can someone respond? Can you guys still hear me? If you can hear me, please react on the last message I dropped on the group. If you can hear me, just react on the last message I dropped on the group. The message I said we are live now. Join in, guys. Please react to it. Okay. All right. All right. Let's go. You're expecting price to come to your TP. This is your TP. So now this is your daily time frame. If you're to check, so when I say wait for confirmation, or when I say I'm going to let you know when to start buying, right? If you've heard me use that phrase before, like on the general group, I'll let you know when to start buying. Now, this is once price has gotten here, we know that yes, this setup is an A plus. This A plus is set up. This setup is A plus. But then we don't just start once price gets here, we don't just start buying because we are not also swing traders. Basically, we are not also swing traders. We are trying to. Most of us have small accounts. We don't have like $1,000 account. We don't have because if you want to just most swing a swing trader, what a swing trader is just going to do is he has gotten a setup and then he has gotten his break and everything. Everything has aligned. He's just going to put a limit here and then put SL here. This SL might be like $200 or $300, depending. Let's say on the lowest lot size on the lowest lot size, you might see $200, $300. Now, that person is a swing trader. He has the money to risk, right? He can actually risk. Or let's say his daily time frame is his time frame that he uses to get his entries and also buyers, right? And then he has the money to risk. But for those people that don't have money to risk, let's say like the day traders, like you're just trying to grow your $50, your $20, your $10 account, you don't just jump into the market. You don't just jump into it, okay, or put a buy limit. If you use buy limits, this move has taken you out already with your $50. It has taken you out already. Even if you have a $50 account, this move alone, it has taken you out already. And then you say, you start complaining this, complaining that, not knowing that it is actually wrong. You were supposed to wait for a break of structure to the upside. Basically, that is your confirmation. A confirmation is a break of structure to the upside. So when price has gotten here on your daily time frame, what do? You wait for a break of structure. Now, what is that break of structure? Break of structure is what's the confirmation that you're looking at for? You're looking at for a break of structure to the upside. Now, this is the lowest. This is this high that was created before price got to this low. The last high that was created before price tap into POI. You must wait for price to also break above it, which this is the highest point the market got to. Now, like I told you, like I said, we don't use week. We don't week out are not valid because we can see this candle close here. This candle started here, and then we have like this long week. So we are using candle body for our break of structure, which you can see what happened here. Price actually tried to come. Price actually tried to break above this previous high. But price did not do that. What happened? Price just used week, just break above using week, which is not valid. Like I said, it is not valid. You must always wait for price to break above it and close above it with candle body, which this is it. This is what happened. Price came back, broke above. Once price has broken above the previous high that was created before price got to POI or price got to the order block, basically, you have a confirmation to start looking out for. You have a confirmation to start looking out for buy scenarios. So once price broke this high, I told you guys on the group, you can start looking out to buy this market. You can start looking out for buy opportunities. Now, another thing, you don't just look for opportunities on the same time frame, on your daily time frame. Like I said, your daily time frame is basically for your buyers. You use your daily time frame basically for buyers. You are not a swing trader, so you cannot trade this time frame. You cannot use this time frame as your entry time frame, right? So what you do is you go down to your 1 hour time frame, which we are going to do that now. So let's mark this zone out. All right. So let's go to our 1 hour time frame. All right. You can see this is when we had our break of structure on the daily time frame. So I'm just going to take it out because now we know that yes, we have a break of structure. So when you come to your 1 hour time frame, what are you looking at for? You're looking at for buy scenarios. Basically, you're looking at for buy scenarios. Now, what is the buy scenarios? You're still looking at for this our setup. Sorry guys, let me go back to that setup. So when you go down to your daily time frame, when you go down to your 1 hour time frame, because here you want to, let's say you want to use your 1 hour time frame to take the trade. You want to use your 1 hour time frame as the entry time frame. Why I'm using 1 hour here is because that is what I use. I use my 1 hour time frame to actually take the trade. So when you come down to your 1 hour time frame, what are you looking at for? You're looking at for this same setup. You're looking at for a sweep, a break, inducement. You're looking at for SBI basically. You're looking for a sweep, a break, inducement. The same, like I said, the same thing that you're doing on your daily time frame is the same thing you're going to be looking at for on your 1 hour time frame. It's the same thing you're going to be looking at for on your 1 hour time frame. You're not doing anything different. You're not doing nothing different. So let's go down. Let's go to our 1 hour time frame. I just came in so that I can show you guys that you're still looking at for this time frame. I will draw it on the 1 hour so that we use it to look out for. Easy to look for it. Let's go. Okay, all right. So this is it. So price. I'm going to use what I'm going to do now. I'm going to show you guys the setups that held and then the setups that did not hold. Basically, if you also hear okay, if you're in my inner circle, you see me send a setup and then at the end of the day you see me say, oh, there was no confirmation, right? I will say no confirmation, no entry. I'll also show you why, right? So you can see we have our first. So when you're coming down to your 1 hour time frame, first of all, let me say this. When you're coming down to your 1 hour time frame, you are looking out for two different types of setup. That's why we have the type A setup and we have the type B setup. So the type A setup is basically this. The type A setup is you have your sweep. Type A setup is basically the complete structure. It's basically the complete setup, right? It's basically the complete setup. You have your sweep. You can see you have your sweep. You have your break to the downside. You have your inducement, your liquidity. Then what are you waiting for? You have a second break of structure. So you're just expecting price to come into this zone and then buy. Are you guys following? Are you guys still following? All right. So yeah. So this is your type A setup. Now your type B setup. This is what your type B setup looks like. You have your type B setup. Only one thing is not there. The type B setup, only one thing is not there. So you can see here you have your sweep, you have your break of structure, you have your inducement. But here there's no sweep. There's no sweep. So when you go down to your 1 hour time frame, you're looking out, you're looking out for this setup or this setup. Now, another thing that I have to say before I move on, when you've had your buyers, let's say, your buyers told you that the market is going to buy from here to the highest points the market got to. Now you have no business looking out for, once price has gotten here and giving you and price has given you a confirmation, you have no business looking out for sales. For this, if you count, like I said, one candle is 1 day. So if you count this is, I think this might be even two, this might be 1.5 months. So you have no business looking out for sales. You have no business looking out for sales, because what is just going to happen? You will also see A plus setups for yourself for you to take a sell. But now those sell, one thing is going to happen. They might not hit TP. They will actually give you a confirmation and then they'll start playing out. Then before you know, price reverses and goes and then hit your SL, and then you start complaining, oh, this that. It's just that the only problem is just that you did not stick to your plan, which your plan tells you that once price has gotten here and price has given you a confirmation, you're supposed to buy from here to the highest points the market got to on the daily time frame, or you went to go and sell. You will still be hitting SL, be hitting SL till maybe one day you just say, okay, because there's one thing about this forex stuff. If you don't, if you have a plan and then at some point you stop, you don't follow your plan, one thing is just going to happen to you. The market will put you in a position that one day you actually start, you actually start respecting your plan, because you hit SL, then you now realize when your money has finished, and then maybe you went to go and backtest, or you went to go and relearn, like you went to go and study, you now realize that, oh, I shouldn't have sold in this market because my buyers told me I'm supposed to buy from this zone to it. I'm supposed to buy from here to here. But now your money has finished and you cannot trade anymore. So now you just start having A plus setups. You just start looking out for buys, and then you actually see that the buys are actually playing out. But now your money has finished. You have squandered all the money. You have used the money to be taking unnecessary setups that you shouldn't have been taking. So once price has told you you're supposed to buy from here, once your buyers on the daily time frame has told you that you're supposed to buy from this zone to this zone, respect it. From hope you can see me. Just raise it. Can actually people and All right, just me. You're still hearing me. All right, so let's continue. So like I said, when you come down to your 1 hour time frame, what are you looking out for? You're looking out for you're looking out for these same setups. Basically, you're looking out for these same setups. So let's start looking out for it. So here we can see price actually retested this other block. So where's the next other block? This is an other block. This is another block. Price gave us liquidity. Now this is a type B setup because there's no sweep. If you can see, there's no sweep. So this is a type B setup. Hold on, guys. Let me send a message to the group. Please react if you can hear me. I just sent the message now to the group. Please just react if you can. If you react to that message, if you can hear me. Please react to the message, to the last message that I just sent. If you can hear me, please react to the message. If you can hear me and if you can see my screen, please just react to it so that I will know. All right. So, right, someone just reacted. I just have one. Someone else. I should have like two more reactions before I start. Before I continue, so that I can be sure. So that I don't just teach and then nobody's hearing what I'm saying. All right. Okay. All right. Let's go. Let's go. So yeah, you can see when price goes to this POI, you can see this is the type B setup. This is our type B setup because there is no sweep. We don't have any sweep for this setup. There is really no sweep. So this is our type B setup because we have our other block and we have our liquidity and we have a second break. We have our second break of structure. So now we don't just this like I said on the daily time frame. You don't when price gets like you see price got to it. Now you don't just wait. You don't just enter the market like that, right? You wait for a confirmation. So what is a confirmation? A confirmation is an engulf candle. Is an engulfing candle basically. So and a confirmation is if this candle, let me, what will I use to draw that? What will I use to draw that? Let me just use this. So if this candle engulf this previous candle and close, let's say above, what can I use to draw this? Let me look for a drawing. So you're looking out for one of this. Let's say this green candle. If this green candle closed above this previous candle, right? If it closed below this previous candle, that is when you have a confirmation to actually buy the setup. That's when you have a confirmation to take the trade. So when price gets here, you wait for an engulfing candle. Later you can go and check what an engulfing candle is so that you can really understand. Yeah, basically. So in case you want to trade, if you want to trade on your own, you can actually understand. You can actually know what an engulfing candle is. So you wait for this candle to engulf this other candle. It's basic English. Like you wait when they say something is engulfing the other thing. It just means that it is overshadowing the previous stuff. So you wait for this candle. Once price has gotten here to your POI, you wait for candle to engulf this candle, the previous candle. Candle body, remember, because that's you use that as a break of structure. So as you can see, that did not happen here. Rather, what the price do, price kept selling. It broke below it. So that's how you use it. So if I know that I send the setup to the group, so now you hear me say no confirmation, no entry. Basically, I do not have a confirmation here, but there was an A plus setup. But because I don't have a confirmation. Basically, confirmation also helps you not lose unnecessary money. Because imagine you use buy limit here. Now you've lost maybe $10 or $20 when you could just do the right thing. Basically, when you could just wait for a confirmation before you take a trade. Basically, right? So this is the first setup that did not hold. So now inside this setup, there was another setup that formed. Inside this setup, there was another setup that formed, which I'm going to show you guys. So let's keep going. So as we're going, we can see we have a setup here. We have our sweep. We have our sweep. That's our other block. We have liquidity. So what are you waiting for price to do? You wait for price to come back. Your SL always be below. Your SL must be below this zone, not on it. Just give it some space to breathe, just in case of incasity. In case it just wants to weak out this print and then just keep going. Then, like I always say, the highest point the market got to, but we had so many. I'm just coming to realize that we had so many setups inside here. No, I'm going to show you guys all. I'm going to show you guys all. So this is the first one. This is the first one. Although it did not hit TP, but you can see what happened. We have our sweep, we have our break, we have our liquidity. Then we have a second break to the upside. We have our second break to the upside. So we would what you just do, you just wait for price to come back to your other block and then to the highest point the market got to. Even though price did not actually reach here. But do you guys see what I was saying? This is our sweep. This is our sweep. This is our other block because price did not come out to retest it, which gave us liquidity, which this is our liquidity. So what do you wait out for? What do you wait for? What are you expecting the market to do? You're expecting the market to come back into that zone, take out liquidity, retest the other block, and then move to the highest point the market got to. That's one. So let's keep going. I've seen another setup inside here because we have our sweep here, we have another block, we have liquidity here. Price came, tap into it, and then move. But the same thing happened. It don't hit TP. But you guys can see like the vision. You guys can actually see that the setup actually played out. Let's keep looking out for more setups. So as you can see, we have nothing here. Price has not really given us anything to work with. Although we have another block here, and then price came back to use the other block to actually buy up to the upside, but there was no liquidity, so this trade you can't take it. Even though some people might have a strategy that actually works for them, but this liquidity is too far. It's too far away from this other block. Do you get? So we can't actually. This is not a valid setup. Although there are people that will take it, like I said. So let's keep going. Let's keep looking out for setups. I see something here, but price came back to retest it. And this is the other block. This long black candle. This is the other. This would have been an other block, but price actually came back. This was an other block, but price came back to retest it. So it's no more valid. Let's keep checking. So I've seen this other. I can see something here. I can see that. I can see liquidity. But then price actually tried coming back into it, but price did not use it. But inside the same place, there was another order block. I'm going to now explain something to you. So if you hear me say, if you're in my signal room, then you hear me say, I have another POI. You hear me say something like, I have another POI. Basically, this is just what I mean. We have our other block here. We have our liquidity. Just in case you have question, I'm going to, two people are going to ask me their question before we end this. Only two questions. All right, so this is this small candle you're seeing. This is another block. Because this is the last candle before an impulsive move to the opposite direction. This was the last sell candle before an impulsive move to this buy direction, which price actually came back. Price actually tried to come back to actually tap into it, but it did not tap into it, it did not retest it, leaving that point a liquidity that price has to come back to take out. As you can see, we have our break of structure. You have your break of structure. So what are you expecting the market to do? Expecting the market to buy to the highest point the market got to. And as you can see, this happened. That's exactly what happened. This is your type B setup because there's no sweep. You only have just your order block. You only have just your order block, and then your liquidity. You have your second break of structure. So you wait for, as you can see, okay, now your confirmation. So when price got here, you can, after this candle, you can start buying the market. You can start looking at buying the market after this candle has been formed, because this candle has engulfed 1, 2, 3, 4, 5, 6, 7 candles. Just this one candle, it has engulfed almost all the candles that were here. If you count how many candles there are like 6 candles before this particular candle. So once this happens, you take your trade, and then you just wait for price to hit targets, basically. So if we keep on going, you will still see setups that you can take if you keep on going. So you guys remember we had this setup. Price did not actually leave us behind. Price came back, tap into it. We are expecting the market to buy up to the highest point the market got to, right? Like we always say. And what happened? Same thing happened. So now you have your first setup. You have your first TP hit. You have your second TP hit. This is your first TP hit. This is your second TP hit. So you guys can see, like, basically this is basically how I trade. Even though there's some other things that I add into it to actually make sure, because we have like there's something called 50%. You have to check if that setup is in your support zone or your buy zone. Hold on, guys. Please give me a second. Let me plug my system so it doesn't go off. Just hold on, I'll be back. All right, let me just continue. All right, so if you have your question, you can ask now. I think I have given you guys enough already. If you have your question, you can ask. You can just raise your hand up, and I'm going to give you the mic. If you have a question, you can ask. Yeah, just raise your hand up, and then I'm going to give you the mic.
Good evening.
Yeah. Good evening. You can continue.
Yes,
Continue.
sir.
What's the question?
My question is, what's your best confirmation at your point of interest, or what candlestick is it candlestick pattern, your chart pattern to for confirmation at your point of interest?
Okay, so you just need one thing. Don't complicate the whole thing. First is just easy. Don't complicate it. Just when you finish this, you can go and look out for what an engulfing candle is. Basically, that's what I use for my confirmation. Or let's say, let me give you guys another confirmation, another one. So let's say you miss the first setup. You miss the first setup, right? You missed the first confirmation. Maybe you were sleeping and you woke up. Oh, I've missed the first one. What do you do? How can you get back into that trade? There's only one way you can get back into the trade. I mean, there are actually two ways, but I'm not going to show the second way. The second way is going to take a lot of time because you have to go down, you have to go lower to your 10 minutes time frame to actually start taking the trade. But let me just use the one that you can still use on the same time frame. So once a confirmation has been given and then price has started moving, it's always going to give an order block. There's always going to be an order block, which we had this order block. So once you've had your order block, just pray to God that price actually comes back to tap into it. Because let's say if this happened, price tapped into it, you won't buy. Don't buy yet. Wait for price to break above this previous zone. If price breaks above it, then you can start buying the market. So you just wait for price to come back into that other block, and then you wait for price to break above it also. So once price has done that, you can actually start buying the market. So that's the second one, basically. Do you understand that? The person asked the question, do you understand?
Yes, I do.
All right. So let me actually show you because it actually played out here. So price got to POI. Now this candle engulfed this previous candle. This candle engulfed this candle. So let's say you took some people took the trade, or let's say this was your setup, and then you miss this first setup, you miss this first one, right? So you miss this first one. So what are you waiting out for? You can see we have price did not tap into it. Price did not tap into it. But you can see it always happens. Most times price will always come back to actually tap into it. But for here, price did not do that. You can see after this candle, price actually tried coming back to retest this other block to keep going up to the upside, but it did not happen. What happened? It just came, broke above this high, and then started going. Some people who actually enter the market once price has given them a confirmation, like once price has broken above this other zone, this other high. Yeah. Even if price is not up here, but once price has broken above, because this is like a mitigation, there's something that is coming back to retest. There's something if you go down to your 30 minutes, you actually see that it came back to retest another block. So price doesn't just move like that. If you see it coming back to a zone, there's always something that's coming back to come and retest. There's always something that is coming back to come and their money being stuck somewhere. So it's always trying to mitigate, come back somewhere, and then retest another block to keep going to the opposite direction. Sorry, to keep going to your direction, basically. So yeah, I hope you understand that. Apart from that, just look for an engulfing candle, and you're good. Any other question?
Hi, good evening.
Yeah, good evening.
Please, while we're trying to explain the type B setup, I think I lost it because you were actually breaking. I didn't hear you clearly, but I lost it when you said the last bearish candle before the impulsive move. I didn't really get what you were trying to say there.
Okay. Does that have to do like your other blog, like when you're looking out for your other blog? Because I know that's why I said it.
You were trying
Okay, so
to explain
what
the
was I
type
trying
B
to
setup
explain?
where you said there is no sweep. We're working with the last bearish candle before the impulsive move.
Okay, I was trying to explain what another block is. So an order block is an impulse is another. Okay, let me show you what another block is. So this is an order block. For a setup to be valid, you need to have let me say this first. For a setup to be valid, you need to have your sweep, a break of structure, and then you have to have a sweep, break of structure, and then inducement. And then inside those stuff on the chart, because these are not just lines, these are actually candles. They're like you're working with candles. So a candle has to be your order block, right? A candle has to be your order block, which let's say for this setup, this this last this last sell candle, because I use the black candles for my sell. So this last bearish candle, which is this black candle, before an impulsive move to the upside, to the opposite direction, that's the order block. You can see after this candle, you can see this impulsive move to the opposite direction because it did not keep the opposite direction of sell is buy, basically. The opposite direction of sell is buy. So if someone so this is your last candle. Like I said, this is your last candle before an impulsive move to the buy side. This is now your order block. That last candle is your order block. Do you understand that?
Yes, I do. Please, another thing, I don't really understand what you mean by a sweep.
By a sweep, it's basically like I don't know any other word to call it, but it just means that price broke below a low. Let's I can call this my sweep. I can call this my sweep because price broke below it. Price broke below it. Do you understand?
Okay.
Basically,
Please, one last
that's just what it means. Oh yeah. Ask.
please, one last question. Would your recording be dropped on the group?
I'll post it on YouTube so you guys can always go back to watch it.
All right, thank you.
All right. Any more question? All right. So if there's no question, I think with this few points of mine, I've been able to show you people some of the things that I do to actually take a setup, to actually take a trade. So I'm going to drop this video on. I'm going to drop it on YouTube, so you can always like go back and then rewatch it. We just go back and then watch the video. You might not really get it on the first time, the second time, right? But maybe when you've gone through the video like 5 times and then you started practicing, you'll actually be able to see all these things. So goodbye guys, and then have a good evening.